Hi there, guys, and welcome to this week's episode of Midweek with Indiacharts. I'm your host, Muskan Kapoor, and I'm joined here with Jay Vora. So, we're going to discuss about this entire week, what has happened, and what's ought to happen. So, without any further ado, we will just quickly get started. So, Jay, I wanted to understand if there are important data points which has been released in the past, or are we going to see a few data points being released? Also, the S&P 500 has seen some correction lately. So, is the bullish trend reversing?
Yeah. So first, talking about the data points, so there has been some mixed data points in the past couple of weeks. So, for example, the housing activity is showing some rebound. Then there is some construction activity also that seems to be happening and that seems to be picking up. But at the same time, when you see the jobs data, that was a bit lackluster. And the silver lining in that jobs data was that the employment within the private sector that has fallen significantly, okay, from the previous month. So it is kind of a mixed data, and in fact today CPI data is going to be released, and all eyes will be on that. Okay, because the expectation is that the CPI will fall to around say 3.1 or 3.2 something. I don't exactly know the figure, but it is somewhere around that level. But the pain point still is the core CPI, which is still very high and is around 5. Okay, I think the last reported was 5.3, and this the expectation is that it will come to around 5. So any negative surprise on the core PCI front or the CPI front, that can lead to some sort of knee-jerk reactions in the near term. But that's about it. I think the market is sort of factoring in a rate hike in the coming Fed meet, which I think is supposed to happen in the last week of July. So at that point of time, it is expected that 25 bips will be hiked. And Fed had mentioned earlier that they may see 2 rate hikes from here on. Okay, so that means this rate hike, and there will be one more rate hike towards, I think, probably by this year end. They are looking at 2 rate hikes. So when they will do it is a question, but overall they have guided for 2 rate hikes more. I think that this time, obviously, the rate hike looks imminent. I mean, most of the market participants are factoring in that, but we need to actually see how the data is playing out, because now you can see the core CPI, the core PE and all, they are all trending lower. Okay, they are not trending down significantly, but they are trending in the right direction. So probably, Fed has hiked rates almost around, they have hiked significantly in the past 1 year. Okay, so the effect of that will be seen in the coming weeks and months. So the Fed, I think, might want to pause and see. But because see, if the Fed is going to hike the data for couple of more, we might see 2 more rate hikes. Then ideally, bond yields should have gone off the roof and it should have been higher. But if you see the 2 year and the 10 year, they broke past the previous high, especially the 2 year bond. Okay, the 2 year bond yield broke past the previous high, which was, I think, around 5.1, but now it has cooled off. Okay, so the reaction of bond will be very important once the CPI data comes. But I think the market is suspecting that, it is basically calling it a bluff for the Fed. Now it needs to be seen, like I said, whether the Fed goes and aggressively, continues to keep hiking the rate. But broadly, the sense is that we are coming to the, terminal point. So somewhere over here, the only question now the market is concerned is that when will the rate cut happen? Okay, so that is now getting delayed, and many people are expecting that even till mid of 24, the rates won't be cut, or it won't be cut down dramatically. So that is the fear point. But I think that we are getting towards the fag end of the rate hiking cycle. Now coming back towards the trend of S&P. So let me share the screen. See, if you see the trend for S&P, I think we had discussed this earlier as well. Wait, let me hide the drawings. So yeah, we had discussed this earlier as well, that there was a nice 5-wave rise that we have seen. and there will be a consolidation. So it has come back to the 20-day average. So far, it is holding the 20-day average. Okay. So now there is one thing that I am not sure, whether we, test the 40 hour, we complete the cycle and only then rise higher, or we continue to rise higher, taking support at the 20-day average. But in either ways, I think that, at the max, there can be a knee-jerk reaction towards the 40-day exponential average. This probably is, kind of a worst case situation right now. But the best case is that, probably we have done this 2-3 days kind of correction, and the S&P index starts rising higher from here. Okay, because when we look, see, it is very important to understand what the larger time frame is telling you. Okay, and we had discussed this earlier as well, that if you see the larger time frame, the 20-month average is taken out on a closing basis. Okay, this we had discussed it earlier as well. You see the bullish crossover in the RMI. So over here, frankly, if you forget about the news, what is happening, and if you just focus on the chart, okay. So imagine that you were in a room and you don't know any of the news that is happening, or things that are going around. And if you just have to look at the chart, then the charts are telling you that the trend is bullish right now, and there is no sort of weakness as of now that is creeping in. Okay, to be very honest, it is only when the 40-day exponential, okay, which you can see over here, which it has been respecting ever since, after this consolidation, it has been respecting this blue line, which is nothing but the 40-day exponential average. Only if that breaks on a closing basis, that is where you should start worrying, whether things are changing or no. But I think until then, it looks good, and the price action is forming a higher top, higher bottom structure. So overall, technically, it is bullish. And also, one more thing is that when we look at the CFTC speculative data, okay, so wait, it is loading. I think we can check it over here. Yeah. So when we look at the CFTC speculative data, so over here, right now, the people are still short. Okay. And they, they have covered, like, from the highest point, I think it was, 4,044, 444,000 contracts, which were short. From there has been a significant, covering. But when we look at the overall context, it is still very high. Okay, so this ideally needs to cut, because this is telling us that the people who have been short, okay, right around the bottom, which basically was somewhere over here. Okay, so many of the people are actually short from this point or this point. Okay, they are also not covering as of now. That is what it looks like, because when we see the data, so, the large shorting was done on, 21st of April. Okay, so when we look at the chart, when was 21st of April, it was somewhere over here. So after that, we have rallied so much, yet the short positions haven't, cut down a lot. So that means that these short position needs to be cut. And if that happens, there can be a further short covering rally that we can see. So basically, the point I'm trying to make is that as long as the daily averages hold, I think the overall trend is bullish, and there will be minor hiccups here and there, but broadly it should trend higher.
Okay, got it. I'll just elaborate to my previous question as well. We will talk about a little bit more about the S&P as well. I wanted to know, because a lot of people are talking about the US indices, like the rally has only been led by a few stocks, and the S&P data will eventually give up. So what are your thoughts on that? Do you see the uptrend in Nifty 500 reversing again?
So basically, the narrative is that, Apple, Microsoft, Nvidia, these are few stocks that are only pushing, NASDAQ and S&P index higher, and there is not, much broad-based rally. So there is some truth to it, but not really, because when we look at the other indices as well, okay, now I have the screen. So over here, see, these are just few of the indices which I'm tracking. Okay, so this one is, say, Dow Jones Industrial, this one is S&P 500, this one is NASDAQ 100, this is transportation, this is utility, this is banks, industrial and mining, and small cap index. So if you zoom out, Okay, if you zoom out for any of the indices, you will see that they have been rallying. Okay, it is not that the rally has been very narrow. So you can see over here, especially everywhere, basically from May, the rally has picked up and it has become a bit more broad based. Banks are still a bit of a laggard, and utility, you can expect some underperformance because these are usually your defensive names. But when you see, Dow Jones, it is hitting, it is into this consolidation phase and it is trying to break out. But if you see S&P 500, it is inching higher. If you see NASDAQ, it is inching higher. If you see Dow Jones Transportation, that is also inching higher. So I don't really agree that, the participation is narrow. It is in fact broadening now. In fact, even if you see over here, the small cap index, so many of the people were complaining that the small cap is not picking up. But you can see that there is a range breakout over there as well. And I think as and when we see those short coverings, which is expected, looking at the CFTC data, you will see a lot more, breadth in the US indices. And basically the breadth should ideally, widen.
Got it. Correct. So let's talk about the dollar index. The dollar index has fallen sharply in the past few trading sessions. What is your view on that? And what about the emerging markets and the Indian indices also?
Yeah. So this is actually one of a very big talking point. Okay, so let me open it over here. So when we look at the dollar index, the chart is now actually looking very good, because when you see over here, okay, what has happened is that on the weekly chart, there has been a bearish crossover. Okay, this is something that we spoke, a couple of weeks back as well, that it is resisting at the 40-week exponential average and then it is turning down. So the good part is that it has broken below the previous low. Now we need to see a weekly close below that. On the daily chart, if you see, there has already been a close below the previous low and it is trending lower. Okay, so over here as well, the RMI, which is a proprietary indicator, that is in a sell mode. And on the weekly chart, if you see over there as well, we are actually seeing a bearish crossover. So all these things particularly are, bullish for the emerging market index. And if you see, we had covered, couple of index, and I will also show you in the dashboard which I have formed for the emerging markets. So see, this was Taiwan index. So there is a nice ABC decline that is complete, and it is starting to inch higher. So this we had posted couple of days back. Then I think even if you see Kospi, that also we had posted, I think yesterday only. So both this article were posted yesterday. So over here also you can see that there is a ABC decline, and now it is trying to inch higher. Okay. Now, when we look at the emerging market basket, so over there you will see that almost similar pattern is being formed almost in all other indices. Okay, so you can see over here in Hang Seng, there was an ABC decline and it is now trying to pick up. Okay, this was Kospi, which I already discussed. This is Taiwan, which I already discussed. Jakarta is actually leading. Okay. Thailand index is not picking up, but over here, if you see Australian index, there is an ABC decline and it is now trying to pick up. So if you see across the board, first thing what you're seeing is that the dollar index is confirming and it is breaking down. The major breakdown, I think, will come, and which, wherein I think a lot of funds will flow to the emerging market is when the dollar index closes below that 100.70 mark, which we have been talking for a while, because that is a very important support level. So over here, if you see, so this is the level. This is 100.70. This needs to be broken because this is held for quite a while now. Now many people are taking this as a consolidation or a base formation or something, but the moment we close below 100.70, I think emerging markets should pick up. Okay, and these signals that is on the weekly RMI, which is going into sell mode, this is giving us an early indication of a breakdown. Now, this is for the emerging market basket. Okay. Now, when we actually look at the Nifty index, it has actually been a lot more resilient than the other emerging basket. So wait, let me remove all the drawings. Yeah. So if you see over here, since past 6-7 days, we have gone sideways. But the good part is that we are doing that after a runaway rally, which we had seen. Okay. And this is actually very bullish because many of the indices had actually corrected and it either tested the 20-day average or the 40-day average. But we are actually holding out very strong and we are consolidating. So the idea is that once the Nifty index breaks above the recent high, which is I think of 19,523, so there is an uptrend that is expected to continue. See, for the Nifty indices, I will particularly be a little worried only if the 20-day average is taken out on a closing basis, because you can notice that ever since the up move started, 20-day average was not broken on a closing basis. In fact, each time it took support at the 20-day average and it kept forming higher top, higher bottom pattern. Okay, so until the price action doesn't tell you that we are reversing, I don't think it would be wise to anticipate a correction, because many of you may recall that this is actually a bigger medium term breakout that has occurred. Okay, that has occurred. So it is very normal that you can consolidate above the breakout point and technically you would still be in an uptrend. Okay, so I think 20-day average will be very important. And what might happen now, I feel, is that I'm not very sure, but what I feel is that even if there is a consolidation or a minor correction in the Nifty index, there is a good chance that the stocks can outperform. Okay, and for that, I will just highlight you how you can benefit from strike as well, and how you can shortlist your stocks or shortlist your narrow basket where you can focus and you can study more. So basically, if you go to the heat map, okay, it will help you do the relative analysis. So say, for example, I think the rally in the Nifty had started from 26th of June. Okay, so this is where we saw consolidation and it has picked up. So if I go to custom, okay, it allows me to select the date from which date to which date I can see the data. Okay, so if I click on 26 to July 11th, and I can see that PSUs have outperformed, media has outperformed, oil and gas, energy, auto. These are all stocks that have outperformed the Nifty index. You can see Nifty index over here, which is 4%. So all the index above the Nifty 50 has actually outperformed. Okay. Now, the way you can also look at is that if you click on the index, you will get to know that that within PSU banks, okay, PNB has outperformed, Union Bank has outperformed, Maharashtra Bank has outperformed. So, this way you can actually form your focus list, okay, which will help you to, further, take informed decision. And the other way, which I had highlighted earlier also to our subscribers was that, see, if you go to scanners, okay, we have Dow Trend scanners, we have Rohit momentum scanners. Okay, so Dow Trend scanners, what it will help you to do is that, it will help you to understand which of the stocks are in an uptrend, okay, or which of the stocks on a higher time frame are in an uptrend, but in the short term there has been some correction and which is reversing. Okay, so for that I can simply put a filter. Okay, and I can do the selection that throw me the results where the larger trend, that is the monthly trend, is up. Okay, or the monthly trend is turning from down to up. Okay, similarly I will do for the weekly as well, wherein I select down to up and up, so it will give me the result. So basically through this, what I've done is that I have made sure that on the higher time frame the stocks are bullish. Okay, that means they are trending higher. And then what I do is that on the daily chart, I come and I say that you show me the stocks which are turning from down to up. Okay. So the moment I do that, I get lots of scans. Now it is not obviously necessary that you will buy all the stocks, but what you can do is that you can shortlist some of them. Okay, you can do a deep dive and you can study the stock, and that will help you to be with the stocks which are trending higher. Now, similar scan, you can actually do it in the Rohit scan as well, where I say that on the monthly chart, okay, you show me the stocks where the Rohit scanner, which is the Rohit momentum, is in buy, okay, which is the RMI. Similarly, if I do, show me the stocks which are actually, getting into buy or they are in buy. So sorry, we can actually do it for the monthly as well, wherein you also show me the stocks which are giving a fresh crossover. Okay. And in the daily, I'll come. So with this, again, I have made sure that on the higher time frame, the trend is turning, it is either turning around or it is already in an uptrend. So what I do now is that I come on the lower time frame, that is on the daily chart, and I tell that show me the list of stocks which are giving us fresh crossover. So in this case, Kajaria is one. So over here, then you can basically analyze that there has been a consolidation, there has been a retest of the averages, and now it is inching higher. So probably, in this way, the way it will help you is that it will help you to narrow down your time, in finding out the right stocks. Okay, again, just as a disclaimer, this is not an advice, to buy Kajaria or any of the other stocks, but I'm just stating that how you can, maximize the use of the Strike platform and make an informed decision, because we have tried our best to put things in a simple way and in such a way that it will help you, reduce your time, and you can focus more on, researching on the shortlisted stocks rather than, first just trying to shortlist the stock out of this 2000 stocks and all. Okay. So this is how I think you can make a good use of Strike. And personally, that is how we also look at it and try to understand. And also, I don't know if many of you are aware or no, but there are also many sentiment indicators where we have put in, wherein, participant positioning data is there, FIIs, DIs, long percentage, long percentage of FIIs, DIs, clients and all. Then there is momentum swing, which is our proprietary model. And over here at the top, okay, you can see one icon. If you click over there, you will basically get the videos of all the, we are in a process of putting out the other things as well. But as of now, sentiment, we have covered everything. And that is actually the most important thing as well. So, you can have a look at the video and understand how it works. And hopefully, it does well for you.
Correct. You can go to web.strike.money if you want to use the tool. You also have a limited period of offer to use it for free. You can experiment. You can come out with various combinations of different tools that are present to get your favorite or your best stock, which you personally would like to buy or sell, because there's no right or wrong combination. It's all what works for you, and a platform that probably has multiple of these things. You can try different variations, and there are multiple more things coming up also in.
Yes, this was one important thing that which I also want to highlight, that so far we have done with the basic stuff, okay, and there is some good features, as I told you, like Dow trend and scanners and all. But we'll soon coming up with the FNO list of screens as well. Then there will be fundamental as well, and you will be you should be rest assured that all this has been designed to simplify your investing journey or your trading journey. And this should definitely help you to lower down your time for research. Okay. Especially in finding the basket of stocks where you would actually be interested. Once you are interested, you can further drill down and dig more, and for that, obviously we are working on the fundamental module as well, and that should be coming out soon.
Correct. So you all can wait for it. Until then, you can, again, I'll mention again, web.strike.money is a place you can go to and you can start learning. And there are many more scanners, FNO, and a lot of more data are going to come for you all to consume. So yes, thank you so much, Jeff, for this insightful session. It was really helpful.
Thank you.